Hello, ladies and gentlemen, Greg McCloskey from ForexLive.com. This is the Kickstart video. Today's date is May 17, 2024. In the Kickstart video, I take a look at three of the major currency pairs, the euro versus US dollar, the dollar versus yen, and the sterling versus US dollar from a technical perspective. Let's get started. Looking at the 4-hour chart of this currency pair, and what we noticed this week is, or what happened this week, I should say, is that the price moved up to the 100-day moving average here on Tuesday, found willing sellers against that level. On Wednesday, we had the CPI data come out, along with retail sales in the U.S., Empire Manufacturing. All of those came out weaker, and we saw the euro versus U.S. dollar shoot to the upside, the dollar lower. That took the price above this swing area through here between 1.08758 and 1.0887. That momentum could not be sustained to the 109 level, and the price rotated back to the downside. We started to use that swing area as resistance right through here and moved down further down and trading here today. That move to the downside and trading today came back right back down to the 61.8% retracement of this move to the downside. That level comes in at 1.08354. And you can see that's where the price is stalled. On the downside, we are currently trading at 1.08417. So there is some support buyers against that level over the last few hours of trading. You can see that better off the hourly chart. I go to the hourly chart and take a look at this level. You can see how the price came down, tested the 61.8, came down, tested 61.8, and then had another hourly bar, current hourly bar, which we're trading higher. So we've traded a couple hours banging against that 61.8% retracement. Also note here that not only is it 61.8% retracement there, but also the blue line right here represents the 100-hour moving average. Back here on Tuesday's trade, we did move a little bit below that 100-bar moving average, but quickly shot back to the upside. Last Friday, the price did bottom here on this corrective move and found support against that level. So there is some history of finding support against the 100-hour moving average, and join it with the 61.8% retracement makes it a key barometer for traders today. If the price were to stay above that level, it would be more bullish. If the price were to go below that level today, it would be more bearish for traders. And we look down toward the 100-day moving average, again at 1.0819 for the next key target on the downside to get to and through if the sellers are to take more control. Conversely, on the top side, stay above this 35 level, and could see a rotation back toward, let's say the closing levels from yesterday, and also the swing levels up here between the 1.0875 and 1.0887. So that's the euro versus US dollar. Let's take a look at the dollar versus yen, and on the hourly chart here, we saw moves to the upside here. Then we had the Wednesday flush out with the CPI data. That continued into Thursday down to, sort of a random low of 153.59 before we rotating back to the upside. We did get back above this swing area right through here. I'm going to just put a red line through this yellow area right through here. And you can sort of blur your eyes and see how it was a ceiling through here and then a floor. We fell a little bit below the floor through here with the intervention, but then moved above it here and tried to hold support against it in Wednesday's trade into the close, but fell below it on Thursday and then came back up to it in Thursday's trade and then broke above it, increasing the bullish bias. In the process, on the increased momentum, we did get above the 100-hour, 200 and 100-hour moving average. That's the blue and green line here. And we're trying to stay above the 100, both those moving averages, I should say, 155.68 and 155.54. If the price can stay above those levels, and the bias is more to the upside. If we move below it, then the intraday bias is more to the downside with the look down toward maybe the 50% of the week's trading range, or the broken 38.2% in this key swing area. I consider the 154.80 level probably the best level of support now, and key barometer for traders absent or in addition to the 100 and 200-hour moving averages up here. On the top side, get above the 155.95 level, and that has some history as well going back to here. Look at that highs right there, that where the price stalled against that level, moved above it, came back down below it. So this 155.95 level is doing its job so far in trading here today, with sellers against it here, sellers against it here. Get above that level and stay above that level is more bullish for the dollar versus yen. Finally, let's take a look at the sterling versus US dollar, and I'll look at the 4-hour chart for this currency pair. In trading midweek, again, off the CPI data, the price was able to move above the 100-day moving average. That's this moving average right through here. We have been able to stay above that level after moving up toward this swing area near the 127.07 level. You can outline certain levels through here where the price had a ceiling against that level, traded above and below it here before using it as a base to move to the upside. Got messy through here, but then reestablished the level through here. So there's a little bit of a history at that level, and the price moved up toward that level, but found willing sellers before rotating back to the downside. Like the euro versus US dollar, the 100-day moving average is in play at 126.31. As long as the price can remain above that level, it's more bullish. If the price were to move below that level, that would be more bearish. On the top side, the 61.8% retracement of the move down from the March high to the April low comes in at 126.65. And, I can't say that it's done a great job of either being a bullish or bearish barometer for this pair, but if the price were to move back above that 61.8% retracement, it would be more bullish from a technical perspective. So, just because it didn't work in the past doesn't mean it won't work in the future. It's a technical level that I look at, and I believe other traders do as well. So pay attention to that level on the top side, get above it. The bias is more to the upside. If we move below the 100-day moving average, the bias is more to the downside with this swing area and the 50% retracement in play. Note also that this area was that old box right here where the value, which I call the value area where the price traded for a long period of time with lots of the trading going on in between that box. Yes, moves to the upside. Yes, moves to the downside, but most of it was in that box. So be aware of that down here at the 50% retracement. So there you have it, the Kickstart video of the 3 major currency pairs to start this quiet Friday. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.